So I took the family to Broadway Oyster Bar tonight because A, we're rebels, and B, Broadway Oyster Bar is absolutely delicious. But dinner kind of got cut short because phone started blowing up, and noticed the headline that the Fed has cut the federal funds overnight rate to 0, down a full percentage point from where it was at the start of the day on a Sunday. Thank you, Fed. And people wanted to know how that was going to affect them. And the truth is, we don't know. I don't know. You don't know. Nobody knows, right? Because there's a bunch of things that could happen now. First of all, it's worth repeating that the Fed funds rate that was actually cut has nothing to do with mortgage rates. Mortgage rates are based off of long-term rates. That is a extremely short-term rate. Sometimes the two actually vary inversely. Sometimes they kind of move together. What that's going to do tomorrow in the markets is cause one of two different changes. Either that's going to really get people excited that a bunch of liquidity is about to be injected in the market and stock prices could go up. Or the exact opposite could happen. People could just be scared out of their minds because this is a huge move and it might create some panic. And if that happens, then stock prices could go down. And in either of those scenarios, mortgage rates could follow. Mortgage rates are based off of mortgage-backed securities. So they are completely driven by the supply and demand for those mortgage-backed securities. Meaning if people want to invest in those, it's going to drive the rates down. If people are not investing in those, it's going to drive the rates up because they are wanting to get more return in order to start them back investing in that product. So we don't know what's going to happen. My thought is that it will probably drive the stock market down. I think this is really going to scare people, but I don't know if rates are going to follow it. Typically when the stock market goes down, interest rates go down too, mortgage rates I mean, but I don't know that that's the case anymore. If you notice in the last week or so, I've actually mentioned this to a few different people, that it looks like mortgage rates have stopped following the traditional things that they usually follow. You know, you usually look at the 10-year treasury, you usually look at the stock market. I think that they've completely separated from those markets and are kind of doing their own thing. Now, why? Why all of a sudden would that happen? Three reasons, really. One, capacity, right? Lenders, in order to lower rates and bring in more mortgages, you have to have room for those mortgages, and not everybody does right now. But that's more of a secondary thing. Systemically, I think prepayment risk is one of those reasons. I think that if you're going to invest in a mortgage and then it pays off in 6 months and you don't get to keep it for longer than that, then you're probably less likely to want to invest in that mortgage. The second thing is really the volatility. How do you price a mortgage today knowing that all hell is going to break loose again tomorrow? And how do you navigate that risk? I think you play it more conservative, and I think that's what's going on. Imagine being in my shoes for a second here. Every day you have people asking you for the best advice about what's going to happen to mortgage interest rates, and every day something crazy happens. So we've been pretty good so far, and if you've kind of taken my advice and as this has went on, that's not an indicator of future results, by the way. I don't know what's going to happen tomorrow. I think the market will go down, and then on Tuesday, it'll be a completely new day, and something else will happen, some sort of other breaking news. But what the Fed did today doesn't solve the core problem. That much I know. Cutting interest rates does not cure people of coronavirus, and that's what people are scared of right now. So I don't think that it's going to have an overall positive impact on the market. In fact, I don't want to get political here. That's not me, you know that. But I think that today's reaction was more in response to pressure from the president to look like we're doing everything that we can, for better or worse. I don't know. We'll see. But I don't know that there was a real economics-driven reason for this rate cut today. And so, we'll see what kind of economic impact that it has. I don't know. So let's keep talking. Sorry I don't have more concrete details, but I did want to let you know that your mortgage interest rate is not going to 0. And tomorrow we don't even know if they're going up or down. So I guess we'll keep watching it. Thanks.